Alright, waiting for both the little delayed show today. Waiting for both streams to kick in here. There we go. Live on both the YouTubes and the Twitches. Put my links in the chat. And we will get going. Let's see. Gonna check today to see if we have any skip frames again. It seems like it's okay so far. All right, so may not have anybody in the chat because I had to delay the stream today. So we will just get going here. Oh, let's reload this, make sure it's the right date and show number while I get drink. Show number 323 720 2022. All right. Well, let's kick it. Down, 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 digga, down, down. Down, 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 digga, down, down. Pressure. I've actually done that one on the after show before. But today we're just gonna do what we always do, and that's listen for the drum taps. Like all plans, it starts with step one. Whoops. $1,000 emergency fund. Pay off all your debt. That's step two, sorry. Step mortgage, we don't do that yet. So pay off your consumer debt. Every one of the charges, from smallest to largest. Baby step three is next. And says you stay gazelle intensive. His name is Dave Ramsey, and this is his plan. And I hope to meet him. I admire the man. I've messed up in my life, but these steps have made it right. That's why I go, that's why I go, and why I host this after show. If you don't like the way it's working out, you should do the baby steps. And if you want to have financial peace, you should do Dave's baby steps. Step 4 is when we can take a breath. Go less gazelle and invest. Step 5 is to save for your kids. No student loans at all for college. 6 to pay off your home. Step 7, build your wealth and don't keep it all yourself and live like nobody else. And now you get to live large, and now you get to give large. His name is Dave Ramsey, and this is his plan. And I hope to meet him. I admire the man. I've messed up in my life, but these steps have made it right. That's why I count, that's why I coach, and why I host this YouTube show. If you don't like the way it's working out, you should do the baby steps. And if you want to have financial peace, you should do Dave's baby steps. Trumpet, take it home. Beep beep live from Columbus, OH. It's the Ramsey Show After Show brought to you by D.H. Schumann. Here we talk about the Ramsey Show YouTube chat and the people in it and all things financial and whatever else I want to talk about. I'm your host, Coach Steve Money. I'm a certified Ramsey Solutions financial coach, and you can schedule a free consultation assessment with me at calendly.com/Coach Steve Money. That link is at the top of the chat and in the video description below and on the right side of my YouTube banner. You can reach me on Instagram, add me on the gram, Coach Steve Money, no spaces. And if you'd like to donate to the channel so I can make it better, that would be paypal.me/Coach Steve Money. Alrighty. What up, Matty Bags? Bit cooled off, just irritated. Tad's got rain in the forecast. It's a little warm where Tad is. Matty Bags, I get it. You need to get yourself to where you're not surprised. You're expecting her to say the exact opposite of money stuff that you're trying to do, and you need to expect her to do what she's always done. You need to expect that, so that way it won't bother you as much when it happens, because it's going to happen. Let's see. Today's Ramsey Show host, brand new Ramsey Show today. The host Dave Ramsey, and co-hosting today was maybe her 7th show, something like that. Christina Ellis. I don't have a song for either of those people. What up, Sid? How is it going, Sid? And this is the part where we go market report. Alrighty, Matty Bag says irritated the bank didn't put in the numbers right. Yep, I hear you on that. Okay, I thought you meant about the other thing. No problemo. Oh, Matty, sorry for the confusion there. Said looking at sales papers to finalize the next week's meal plan. Always look at those. The Meyer one is available on Saturday. The one that they show the day before, they have a preview of the sale paper that starts the next day. So Myers is on Saturday for the Sunday sale paper. That is for that whole week. And Kroger is different. Theirs starts on Wednesday, so on Tuesdays they have theirs. And that's where I look for sales on frozen pizza, which I have at my work here for lunches. And yeah, that's basically what I look at. And for PAP, as we call it in the Midwest here, which is soda elsewhere, which brand name would be Diet Coke and Coke Zero Sugar, which is what I get. And I've done maybe I'll do a segment on that sometime, about how I compared the prices of the different packagings of the Diet Coke, which that way would be the same prices for the Coke Zero Sugar and the regular Coca-Cola, etc., etc. And they come in the 20-ounce bottle 6-packs. They come in the cans, which are 12 or 16 ounces. I think 12 ounces for those cans. But the cheapest per ounce is almost always, unless there's a crazy sale on the 20-ounce 6-packs, the even regular price to regular price, the 2-liter is going to be the cheapest per ounce normally, almost always. So I'll maybe show like my spreadsheet, if I can find the spreadsheets where I did that before, I can easily recreate them. If not, or you can just take my word for it that the answer to that is the 2 liters. And then so I take the 2 liter and I take a bottle like this, and I pour that in there. But as we can see, I've been trying to do more agua, and to, you know, save a little bit of money. Probably water is better for you, and so forth. Oh, so where were we? Oh yeah, hey, market's up again. Most up is the Russell Small Cap Index, 1.59%. NASDAQ right behind with 1.58%. And S&P 500, 0.59%. Dow Jones Industrial Average, which is the total market index, is 0.15%. And let's see what we have for this. Oh, so today, this is from CNBC. I couldn't read it because it's CNBC Pro. But I didn't give up there. But it says S&P 500 triggers signal with perfect track record for calling end of bear markets. And so that happened today. Now, it may have gone down since it hit that number, but it still counts. So what I did was I put in some of these words in a search, and I came up with this from the Soledad Times from marginjournal.com. And so I got the story, as you can see, CNBC.com, they give credit there. And what it is, let's see, when advancing volume on the New York Stock Exchange is 87% of the total trading for 2 out of 3 days following a 52-week market low, S&P 500 has never been negative a year later. So that must mean we'll be back up to the previous high before that. So I don't exactly know what that means when advancing volume. The volume is like the group, the total of all trading, I think, is 87% of total trading for 2 out of 3 days. So, and of course, this is the second day it's been up in a row. So the 2 out of 3 days, and so let's see if it explains why. In the world of arcane market trends, this is right up there. And again, it's never been negative a year later after it does this, makes this particular condition. Plotted the returns out in the trend, which has been in place over the past 3 trading days just before Wednesday, seems to work. That came in after the index hits its 52 low in mid-June, 52-week low in mid-June. In fact, the results are pretty good. A median 23% return a year out from the data point is triggered with 100% accuracy. So median 23% return a year out from the data. So by next year, it should be up 23% from this point. So I'll take it. I'll take it. Let's see. The bank should have noticed. That scam caller. Wait, I have that. There we go. All right, this is from CNBC. It's going to stop in just a second. The reason behind a mysterious trading surge in stocks like Berkshire Hathaway has been revealed. Computers, maybe? Let's see. Berkshire Hathaway up 0.96 during the day. And let's see if it updates to the after hours trading. It does not. Okay. Let's check that out. Oh, I forgot to do the other stuff. Well, I got so excited about those stories, I forgot all about the other things that we checked. We checked the earnings calendar. Let's see what Tesla did in the earnings report that came out today. They finished today up 0.8%, and in after-hours trading, they're up 0.91%. So they must have been all right. Let's see. Tesla has dumped 75% of its Bitcoin holdings. All right. Which is $936 million worth of Bitcoin. Drivers have decided Teslas are worth the from Yahoo Finance. Worth the higher sticker price, but are they ready to get burned on insurance? Okay, don't know nothing about that. Let's see. Elon Musk and Twitter go to trial in October because Twitter's decline good for Tesla stock. Let's see. Here we go. This is what I'm looking for. Tesla earnings meet Q2 expectations. Sells what? Oh, probably the Bitcoin. Probably the Bitcoin. So there we go. So they met the expectations. So good for them. Let's see who else. Next week. That's next boom 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 boom. Next Tuesday is Microsoft. Next Wednesday is Meta, the artist formerly known as Facebook. Was that Tuesday, Wednesday, Thursday is Apple and Amazon both. So that'll be a big day for the market. And August 2nd, AMD. Most followed single stocks on Google. The biggest up was the Meta Platforms, artist formerly known as Facebook. 4.16% up. Amazon right behind, 3.86. And Google the least up. Alphabet rather, which owns Google, 0.08%. All right, but all of them in the green, so can't complain about that. After hours. And let's see, the numbers they had weren't even close to what Maddie told him. Maddie was trying to do a phone payment, so we have across the board recommended to him not to do phone payments anymore, just to do the 2 online payments per month that they allow. Let's see, 0.01%, so just barely down is the Dow. And after hours trading, 1.26 the NASDAQ. And 0.41% up S&P, and this is just after hours trading, so this would be on top of what was already a good day for the market. Not quite as good as yesterday, but will definitely take it. Phrasing. Everything down in Europe, everything up in Asia. Currencies, let's see how that US dollar is doing. Up against the euro, up against the Japanese yen, up against the British pound, love, up against the Canadian dollar, sorry, also up against the Australian dollar-mite. No shrimp on the barbie tonight. So that's a clean sweep for the US dollar. How about that? So on George Washington is on the dollar bill, eh? I believe so. I believe that's true. I'm going to just go with that's true until someone corrects me. Crypto, these all were up earlier today, I think, except for Cardano, I think, was a little bit down, and now that's a lot down. Dogecoin was way up. It was like 4 or 5% earlier in the day. Bitcoin was down 2, I think, earlier. All right, so now we can do that story. What's the reason behind a mysterious trading surge in stocks like Berkshire Hathaway? What is the reason? Oh, they are the most expensive stocks priced above $400,000 a piece, and therefore it was often one of the least traded, well-known companies. So a surge in volume that began over a year ago left many scratching their heads. Now, new research released Wednesday has shed light on this trading frenzy and concluded that a change in how Robinhood and other online brokers report fractional trading data was a culprit. Okay, volume is due to the interaction of a well-intentioned but misguided FINRA reporting rule. Robinhood trading and fractional shares, wrote the authors. All right. The Financial Industry Regulatory Authority, that's the FINRA, started requiring brokers to report fractional trades, sometimes just 1/100th of a share, as if they were for one whole share, which the authors coined up as the rounding up rule. The effects of this rule change went pretty much unnoticed until the spring of 2021 when COVID driven trading mania by retail investors boosted the use of fractional trading. With more tiny trades being reported as full shares, trading volumes for many stocks became massively inflated. Well, that's pretty dumb. I don't know what the intention of it was, maybe for it to make sure that they were all reported, even though they were fractions of a trade, fractions of a share. But them being reported as one share obviously is wrong. If it's 1/100th of a share and it being reported as one, yeah. I mean, I guess the money didn't get reported, you know, as a whole share when it was just 1/100th, but still, this is also from CNBC. Mortgage demand drops to a 22-year low as higher interest rates and inflation crush home buyers. Surging inflation interest rates are freezing American consumers and weighing on the housing market. Mortgage demand fell last week, hitting the lowest point since 2000. According to Mortgage Bankers Association, buyers have lost considerable purchasing power as rates have almost doubled since earlier this year. Well, it's been pretty much a seller's market anyway. The main problem why it's not going to crash, though, is there's still a shortage of houses. So it's the supply that is the main thing on that. Dave Ramsey says no crash. Their prices are coming down a little. They may continue to a little bit, but basically this is the new normal. So, all right, from CNN Business. These are the keys to 401k investing success in a falling market. Let's find out what these are and if they fit Dave's advice. There was really no place for 401k investors to hide in the first half of this year, even though the portfolios took a hit. They didn't run for the hills. Oh, good. So that means most 401ks, they stayed the course. If not continuing to invest, which they should have, they at least didn't sell everything. The Nasdaq was down 30%, while the S&P 500 and Russell 2000 indices, there we go, indices, love it, were down more than, that just means indexes, were down more than 20% apiece. The bond market, typically considered a safe haven during volatile times, did better, but that's not saying much. For example, the S&P U.S. Aggregate Bond Index, a proxy for investment grade debt, was down roughly 9%. Despite these widespread losses, 401k investors held steady, according to preliminary data from two major 401k providers. Vanguard trading among participants in defined contribution plans was muted, with just 4.3 making any changes to how their money was allocated. And the majority who did chose to move money into stocks as prices declined. All right. So that's smart. At T. Rowe Price, most plan participants made no change to investments or salary deferral rates. But if markets don't improve in the second half of the year, and many analysts think stocks have further to fall before calling a bottom, although Jim Cramer says the bottom was last week. So we'll see. And the S&P data that we have now, that threshold that it hit, that says 100% of the time the market will be positive in the next year, a year from today. Even some steely retirement investors may start to get cold feet. If that happens to you, here's what'll calm your nerves. Okay, so forget timing the market. It's absolutely Dave Ramsey advice. Time in the market beats timing the market. So you don't try to time the market. You don't try to time the stock, the housing market either. If you can afford to buy, you can afford to buy, and you can buy. But you don't time the market. You buy whether it's up. If it's up, you're happy that it's up. If it's down, you're happy that you're buying it on sale when the market is down. So you buy on schedule, like out of your paycheck automatically, or whenever you get a paycheck, then you put whatever you've decided that you can invest, you do that. Rethink your contributions. Let's see. If you can convince yourself not to sell at a loss, you still may be tempted to stop making your regular contributions for a while, thinking you're just throwing good money after bad. That's what I just said, because it's on sale. So, let's see. Knee-jerk reaction, stop contributing until the market recovers. Right, and that's the exact opposite you should do. Key to 401k success is consistent and ongoing contributions. Continuing to contribute during down markets allows investors to buy assets at cheaper prices on sale, just like I said. Reassess your allocation against your current plans. Allocation should stay the same as it always is for Dave's recommendations, which is not single stocks, which is not bonds, which is not target date funds. It's 25% each. So split your investment 4 ways, which if you have a house payment still, it should be, and you're on step 4, it should be 25% each. The 15% total of your gross, of your net, no, of your gross income. I was right. 15% of your gross income into retirement investing, and that should be split up 4 ways. So 25% of that 15% into small, mid, large cap, and international mutual funds. Manage mutual funds, not just the index, because managed mutual funds can beat the index. So you have to pick good ones. All right, so if you really can't stand it, boost your comfort cash. So they're saying to add cash. So, and you can do that, but don't do that as a result of not putting it in the market. All right, so that's all of that one. This is from theverge.com. The new Google Wallet is now available to all users. Yay. Never used it. Google Wallet will be a separate app for the US and Singapore users and a simple Google Pay update. Excuse me. For others. Available all customers now, shortly after people in 39 countries started seeing it available on their phones Monday. Okay. Try this link for it, okay? Google Wallet's official rollout is the latest step in the long history of Google's payment app variation. The company combined Google Wallet and Android Pay in 2018 to create Google Pay, a single app that included tap to pay, tickets, and loyalty programs under one umbrella that worked across Android and Google Chrome. In 2020, Google Pay had a big app refresh to pull in peer-to-peer payments, deals, and other services. Now Google announced Wallet's comeback at its Google I/O event in May. That means input-output. Splitting things up again to create a dedicated home for payment cards, airplane tickets, government IDs, vaccination proof, and even car keys. Alrighty. Back to crypto news. This is from CNBC. Coinbase jumps 14% after saying it has no exposure to bankrupt crypto firms. I guess distancing themselves from the ones that have gone bankrupt. Coinbase said in a blog post that it has no financing exposure to collapsed crypto firms Celsius, Three Arrows Capital, and Voyager Digital. The firm did, however, make a non-material investment in Terraform Labs, the Singapore-based company behind failed stablecoin project Terra. A non-material investment. I don't know what non-material investment would mean, but anyway, shares of Coinbase climbed 14% on the Wednesday. But in after-hours trading, it looks like it's losing 2.39. Or no, 3.18% of that. Let's see if it says what it had no counterparty exposure to several. I just want to see what it meant where they didn't do material. Divides the terror, so we'll go algorithmic stable coin. So if it failed, that means it wasn't stable. that tried to maintain a dollar value using code. This led to liquidity issues at Celsius and 3AC, two companies that made risky crypto gambles using borrowed funds. Debt leverage, man. Don't be doing that. Don't be doing that. It doesn't say. So I guess they supported it somehow, but they didn't put money into it, I guess. Non-material investment. So we don't know what that is. Alrighty, let's check out the Ramsey subreddit, reddit.com/r/Dave Ramsey. This subreddit is run by fans, not by Ramsey Solutions. If you want a group run by Ramsey Solutions, which has just as many dissenting opinions and what do they call that? They call that non-civil, non-respectful things, arguing, etc., etc. That is on there, even though it's run by Ramsey Solutions, and that would be the Ramsey Baby Steps Community is the name of that. And you got to get all those words in there because there are similarly named groups that are not run by Ramsey Solutions. All right, let's see. This is from Furious Krone. I know a kroner is Norwegian money. Is a unit of it's like their dollar, I think, a kroner. Anyway, Furious Krone. What would Dave do? So that's the flare that they chose to put on there. What would Dave do? So they want advice what Dave would do. And a lot of times in the body of the thing it says, and we don't really want to do exactly what Dave recommends. So what do you recommend? Sometimes they say that. We'll see if they actually want Dave advice here and what Dave would do. My fiance and I, that should be, not me and my fiance. My fiance and I are getting married this November, and we want to start the process of getting our first home. Our apartment lease is up in April of next year, and we've been thinking through a few options. Option 1, once our wedding is done, save up as much as we can for at least 5% down. You got to have at least 10% down for a first-time home buyer if you're going to follow Dave's recommendations. So WWDD, what would Dave do? That is the first thing, 10%. Option 2, renew our lease to April 2023. Probably build a 6-month emergency fund. Definitely, if you don't have that. Definitely, yes. Yeah, no buying a house unless you're have your emergency fund already out of debt. And so it doesn't say if they have any debt or not. Let's see. Renew our lease to April 2023. This is probably going to be the option. Build a 6-month emergency fund and try to save for 20% down. Yeah, you got to have at least 10, like I was saying. Option 3, don't renew the lease and go month to month and save for maybe 5-10% down payment after renewing the 3-month emergency fund. I don't think you're going to be able to do that because you're going to pay so much more to go month to month. You're going to pay so much more than by renewing the lease to for another year. They charge you so much more, like hundreds of dollars more to go month to month. So I think our answer is going to be the renew lease to 2023. Together we make a little over $60K a year. That's not that much, even if you're in a low cost of living area. That will go up since got a raise at my job a few weeks ago. Great. Debt free. Great. She has about $2K in student loans, and you're not married yet, so you don't pay for that. But as soon as you get married, you're on baby step 2. Both of you are. So put on hold so you can cash flow the wedding. Yeah, once we're married, plan to use the emergency fund to take care of the loans and build it back up. Right, because you would be in, right. One hiccup we have is that a few years ago, she co-signed a car loan for her mother. Right, they're shacking up there, Tat. You know, like, oh gosh, what's her name? I can't remember. I can't remember the talk show host's name. Kind of like a Dear Abby kind of person. I can't remember her name, but anyway, yeah, she would always call it shacking up. But yeah, so they are shacking up. And yes, Dave does not recommend that. And definitely you don't combine finances until you are married. So doing it Dave-ish there. But co-signing the car for a loan for the mother, you have to assume that she'll have to pay it back. You just have to be ready for it. Not be surprised if the mother doesn't pay it. We know the housing market is a little crazy right now, more than a little crazy. And according to Dave, it will continue to increase. And he even mentioned, hashtag mentioned, getting into a house ASAP if you can afford to, even if you don't have 20% to put down. Yeah, he didn't mean for you though, with her student loan debt, and you not having a full emergency fund. Want us to have peace of mind when getting our first home, then you're waiting. Rent for another year while you get yourselves married and in position to buy the house. And again, at least 10%. You'll have to pay PMI for that. So better to have 20% so you can avoid that PMI. That's private mortgage insurance, and that is insurance for the lender, not for you. All right, let's do one more here. Insight Discern. Monthly budget advice and debt. Post this in another financial subreddit, but I figured I'd post here. I would post here, or I'd post here also. I read Dave Ramsey's Total Money Makeover. That's all you need. Do that. Do what that says in that. And support his ideas and plan. Great. Do that. My wife is somewhat on board also. Somewhat on board is better than none on board, which a lot of spouses are. So we had completed baby step 1, but then I used some of the emergency fund for what? So back to the beginning. Every month we make a lot of money, but I feel like we still live paycheck to paycheck. We have $25,000 in credit card debt and $5,000 student loan. I basically want to get us out of debt as soon as possible. However, I feel we spend too much money. Probably. Family of 5, 3 kids. Take home pay after taxes $13,000. Yeah. Private school, tuition, daycare. And that's what you got to look at. If one of you makes less than $1,200, and is the private school part of the daycare, or do you have one older that doesn't need daycare but is just in school? Think about that. So I'm going to just combine them. So if one of you doesn't make $1,700, or a good you don't want, maybe you want half of one person's monthly income to be what you're paying on daycare and private school tuition. Assuming that's built in, and that's just not like kindergarten, first grade, which they would be going to anyway. $4,800 mortgage, yeah. Okay, $3,000 a month. Where is, yeah, somewhat on board as a broad range. Sid says, she's right. Sid, remind me to, or we'll have to tell Kelly about this. $3,000 for food, restaurants, gas. I thought it was just for food and restaurants and stuff. Gas, necessities, entertainment, subscriptions. All get paid from shared credit card with wife. Here we go. That I try to pay off monthly. So here's the best laid plans. Oh, I'll just pay it off monthly. It's okay to have a credit card. I'll just pay it off money. And here this guy's saying tries, so we know that doesn't happen all the time. We try to stay under 3,000 for all this. For food, gas, necessities, entertainment, subscription. Entertainment should go down to a bare minimum while you're trying to pay off that. So if you support his ideas and plan, you are going to get rid of most entertainment, go down to one movie subscription. Yeah, so advice got from other subreddits, break category out, which I'm going to try to do. Yeah, definitely, because I want to see how much food. And also this part, so if you agree with the book you read, you're also going to cut out that while you pay off the debt. No restaurants, unless one of you is working there as a part-time job. Then you can set foot in there. And maybe you can have some of that food if they give you for like free meals. Or heavily discounted. Boom, boom. $2,300 you paid due to previous divorce. Yeah. And then you can do about that. 700 utilities. That seems high. I don't know. It might be a big house. If you have too much house, you might have to downsize on that. You don't say what that is, but so I mean, basically, you apply your situation to the stuff you read in the Total Money Makeover, dude. Let's see. Biggest issues that we would spend $6,000 a month on food, restaurants, Amazon stuff. How much of that stuff is needed? Clothes. How much is needed? Shopping. How much is needed? That's how we got into debt, right? So yeah. Past few months, we started buckling down and sticking to the budget. Great, which we still have been spending about $3,500 in that budget category. So you can see he's not even doing $300. Oh, that's what he's putting down on the budget, but that's not reality. Still going over by $500, but okay. Questions are, using the shared credit card to pay most monthly expenses makes it easier to track and helps with cash flow. Checks comes in at different excuses. Checks come in at different times and using joint checking account. Didn't Dave in Total Money Makeover, didn't he say something like about cut up the cards and pay them off? Didn't he say that? I think so. Pretty sure he said that. I get that Dave recommends use only cash and envelopes, but I don't think that is realistic for my wife, for one. And given our large lump sums that I need several times a month for bills, is there a better process? If you don't go over your budget, you can use a debit card. It's fine. How can I pay down that debt faster? Everything that I said before. You might have to move down an house if it's a crazy house. Let's see, 13. Let's see, 2.5. That's almost 5, and 2.5. That's 10. That might be. Do that math there. Let's see. Tat says Amazon is not needed. They take home about $3,800 a month. After taxes, $13,000. It says here, Sid. So do the what is it? The 4,800 times. Well, I'll just do the thing there. I'll just do the calc, which you can't see on here. 4,800, and this is Sid's thing that she came up with, which is pretty close to Dave's algorithm there. $12,000. So 2.5. So they do make enough for it, but maybe barely. So yeah. So yeah, it's 4,800 mortgage. So they like barely make enough for that. But if you're going over in these categories, and you have to do all this stuff, they're paying $500 to that debt a month. You gotta kick it into gear more than that. Probably you bought some crap that you have in your house that you're not using regularly that you can also sell, so that way you can do it. The short answer, 72 comments, so people are on fire about this one. Sid says that's about 36% of take home. So yeah, a little bit too much house there. I mean, if you go scorched earth, you can keep your nice fancy house, but you got to go scorched earth for that. But how can I pay down that debt faster? That would be read the Total Money Makeover again. It's very simple words, very simple to understand. You should be able to have that done in one evening. generally. So read that again and do what it says in there about all of your categories, all of your things that you're doing. And the first thing to do would be to cut up all the credit cards and do not use them again. Remove them from Amazon. Don't buy crap from Amazon, etc., etc. So, yeah, all right. Let's see. Ted says, used to buy all our household goods on Amazon before we started the baby steps. He stopped. Yep. It's not house broke from the mortgage too much, but it's middle class vacation instead of wealthy vacation too much house. Yeah. I mean, because of the way you're doing all the other stuff, you're not able to get by on the slightly too much house. So, yeah. Alrighty. So, upcoming streams. Obviously, this show a little bit late today. Sorry about that. Monday through Friday, 6 p.m. Eastern Time. The Ramsey Show, Aftershow show. And the Ramsey Show comes on at 4 p.m. and goes to 6 p.m. Eastern Time. And then I start right after that. And I usually do a live stream, even if the Ramsey Show is a replay, which we don't get many of those anymore due to the number of personalities they have to act as host and co-host. I did a tech sport with Coach Steve Money last weekend. Probably will be doing those on the weekend. I also did a game stream of Uncharted. I'm continuing to go through that. Maybe one or two more streams of that, and I'll be finished with Uncharted 4, and I'll start another game. Curse of Oak Island on hiatus until about November. If there's a special, I will certainly recap that. Once again, I'm Coach Steve Money, and I'm a Ramsey Solutions certified financial coach. And if you'd like to schedule a free consultation with me, you can do that. Links at the top of the chat and in the video description below and on the right side of my YouTube banner. I don't know if that's the right side on your side. I don't think it is. You click the schedule free consultation right there. It takes you to calendly.com. You can see my actual name, Steven Simpson, right there. You click on the financial coaching and it pops up a nice calendar for you to choose what date you would want. Maybe my birthday, August 14th. How about that? You pick the time and can confirm it, and Calendly will get all your information, email address, etc., and they will email me and let me know when that appointment is that you would like, and I will email you back and let you know what information I need in order to accurately financially assess you. And we will make that appointment happen. PayPal is for donations, and you can do that just like D.H. Schumann did to support the show. Thank you, D.H. And that is paypal.me/Coach Steve Money. Instagram is Coach Steve Money, no spaces. And email address, you can ask me about anything at all. Even if you've blocked me and want to find out what my phone number is so you can unblock me, you can do that at, CoachSteveMoney@gmail.com. You think I would remember Coach Steve Money without having to think about it. CoachSteveMoney@gmail.com, and you can ask me about personal stuff like that. If you're somebody that has just like Googled me after not talking to me for a while, you can do that. You can ask me about anything about doing this show, about how I do the after show, like what programs and stuff I use to do that. Oak Island stuff, any question about that you can. About video gaming, about any financial stuff, about Ramsey himself, about the plan, or about making an appointment if you have any questions about that. Fairly straightforward process though. As you can see, it's been all Uncharted. Before that, a month ago, I did 4 streams of a beta of PC Building Simulator 2, not out yet, but it was an open beta. And so I helped them out on that played a little bit of that, found some glitches, reported them. If you have any computer stuff, I have 25 plus years experience of being a PC technician. And you can ask me questions about that as well. If you'd like to sing the Baby Steps song or any these other songs here, you can certainly do that as well. You can pre-record it and just send me that, and I can play that on the after show, or you can do it live on the after show the same way I do it. Alrighty, let's see. Says continue. Continue. She's gonna assume they're in Cali with those numbers and say they get $200 a person per month for groceries. So $1,000, okay. $30 per month on 2 subscriptions for entertainment. Sid being nice, giving 2 subscriptions instead of the normal 1. $100 for restaurants, being nice. Just freed up $1,870 plus the $500 already being used for debt. So, because she feels like being nice. How about that? Does she have a... Yeah, she does have a smiley face. I thought she had the straight line instead of the smiley, but she has the smiley. Alrighty, so everybody have a wonderful evening. One more subscriber to 420. It'll be 420, yo, for the next subscriber. Make smart financial decisions every day.